Good morning, everybody. Hey, welcome to Friday. This is the last Friday of July. As we get ready to head into August next week, we've got some earnings coming out today that we'll talk about, the likes of Ford and others. And we got the PCE coming out this morning. So some big numbers coming out we need to talk about to see how we're doing. We'll do that and more when Dave joins us here in just a few seconds. Before we do that, let's not forget that there's only one thing that you can really control when it comes to your retirement portfolio, and that's how much risk you have. You need to understand what risk you have in your current portfolio. You need to measure it. You need to determine if it's the right amount of risk for you based on where you are. That's exactly why I developed the Core Retirement Design. Give us a call at 863-382-0037 to schedule your Core Retirement Design. With that, we got Dave coming up next.
Clarkson there at 105.7 Light FM. Hi, I'm really glad to have you here today. 8:41, let's check in on your money on Wall Street and see what's going on. We kind of broke a winning streak on the Dow yesterday. Let's see if we can start a new one going. Check in with Phillip Statler from Statler Financial Services, who is on the phone. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. It's just hard for me to believe. I know time flies, but it is really flying by when you think this is the last Friday of July. And man, it's streaming by real fast, isn't it?
It certainly is. I can always tell the month is almost over when Caladium Festival comes around, and that's my activity later on this morning. Go down there and dance around in the sunshine. My bet is that Don Elwell has his shirt off by now because he's already down there, and he's been there for 45 minutes already.
Yeah, it's hot.
Oh, it is. Anyway, yesterday we broke a winning streak. Dow fell 237 points. Standard & Poor's was down by 29, and the NASDAQ fell by 77. It was not a good day on Wall Street. Evidently, we were unimpressed by the Federal Reserve's patter from the day before, right?
I'm not sure, Dave, because if memory serves me right, is that we didn't start out all that bad. But all of a sudden, it just kept streaming down and down and down. And we were down worse than what we ended up before the day was over. And it was a slide. I think maybe some profit taking based on the day before when the NASDAQ had such a big up day. But the Dow broke their winning streak for sure.
Which gives us a chance to start another winning streak, and it might just happen off of the data dump we got from the federal government this morning. First of all, the weird news, because you look at personal income and personal spending, you kind of figure that income should, in an ideal world, go up more than spending, but no, personal income in the country went up by 0.3% last month. Our spending went up by 0.5%. So we're still burning our plastic, even though our incomes are going up. Thing that matters the most, though, is the Federal Reserve has always said they watch the personal consumption expenditures inflation rate. That's what they're paying attention to, and that came out this morning. First of all, PCE inflation overall now at an annual rate of 3.0. That is 0.8% less than it was from the report last month, and possibly even more importantly for the market, it's exactly what the analysts expected. It's declining, it's going in the right direction, and it looks like the decline is accelerating a little bit, doesn't it?
It does, which is great news. I think I pray the Fed will weigh this heavily on their next decision as they go forward. And I know the core was about the same or at least going the right direction.
Yeah, the core was it was a pretty good-sized improvement over prior year, too. The annualized core PCE, that gets rid of the stuff that goes up and down. It was 4.6% annualized. It's down to 4.1% analyzed, and that's actually a little bit better than they expected. One of my analysts was saying they expected 4.2. So while it's a higher number, it's declining at a fairly rapid pace, and it's actually better than the market expected. That put it all together into a big ball. should show us the progress the Fed should need to see for their meeting later on next month, to whether or not they're going to kneecap us again with another interest rate increase.
Yeah, that's right. My analysts were the same way. They expected 4.2, so the 4.1 was a nice surprise. And actually, Dave, that's the lowest we've seen since September of 2021.
That was the number I had. I think the overall was way down in August of 2021, where we had 3% overall PCE inflation. So, I mean, there's no doubt whatsoever we're going in the direction that we should be going. If I ruled the world, I'd say hold off for a little while and see what happens in terms of another interest rate bump, because you noted the bonds, the federal bond yield, the 30-year bond is now over 4% again, and that does not bode well for mortgage rates, does it?
It does not, because that's what they're going to focus on. And so you can expect, if that's going to hang around that 4% number and cross back over again, then you can expect mortgage rates to pump up this next week.
Yeah, I'm seeing 6.5% mortgages being a bargain in a month or so, don't you?
Yeah, if this rate continues to hold.
Makes me feel like a rocket science is for refinancing a couple of years ago at 2.9. Does make a difference. Earnings season continues, and one of my analysts that I was reading a column on said, based upon the early returns on earnings season, he sees something I don't. He says it looks to him like quarter two was the bottom of the earnings recession, quote unquote, and things are improving a little bit. I'm seeing too doggone many hard rooms to play for. Investors looking at their reports from their favorite companies and saying, I'm still selling even if they are beating the street, which indicates to me that absolute profits are still falling off from prior years, don't you?
Well, they are, and I think that to make that call is pretty bold, right? And then because we still, I mean, maybe it is, maybe it's not, but we don't know, and that's a pretty bold call to make, at this stage of the game.
Kind of struck me that way too. Of course, something you and I have both also said is that columnists and pundits have a tendency to go out on real long limbs, and then if the odds favor them for a change and it actually happens, then they put out ads saying, come to me because I was the one that predicted it. And then we just forget about all the predictions they made that were wrong.
Exactly. That's right.
I'm going to go out on a limb. It will rain sometime in the next week.
You'd be like every other weatherman, right?
Yeah, and then I'm going to crow about it when it actually rains. We do have a bunch of earnings were coming out, and kind of a company that was almost becoming a dinosaur in high tech, Intel. They've had a couple, 3 bad months because they've got a couple, 3 bad quarters because they've been getting their share of the market chipped away by AMD. I gather they found a magic number for this one, didn't they?
I'm not so sure about a magic number, but they did bounce back after 2 quarters of losses. They've actually been able to rise up in this last quarter. They beat both on earnings and on revenue this last quarter, and so they beat by about 13 cents a share, or they came in at 13 cents a share. I'm sorry, on almost $13 billion of revenue. So good numbers there. They're up 6% this morning, Dave.
Woo! Yeah, Intel is one of those, they were the first with the best. They were the company that had the processor that ran the IBM PC and all of its DOS and Windows successors. And then a couple of competitors got in there, and all of a sudden the market got fragmented on them and gave them some troubles.
Yeah, exactly. So, earlier in the week we had GM report. Last night after the market closed, we had Ford reported. And Ford really had a good quarter. They came in at 72 cents a share versus the 55 cents expected, and they beat revenue wise by over $2 billion. Now the fly in the ointment for them is electric vehicles. That area ended up losing more than expected, and so that wasn't good for them. A matter of fact, if you look at they kind of broke it down this way, because you remember last quarter Ford decided they were going to break down things into operational units. Mm-hmm. So the old gas operated, the things you and I like to go buy at Ford Blue is what it's called now, and they earned $2.3 billion. The commercial business, which is now called Ford Pro, had revenue of $2.39 billion. And the Model E for electric vehicles was at almost 1.1 billion. So they raised expectations. So things look good there. However, they are getting beat up this morning, 1.4%. And most of that's on the fact that electric vehicles are expected to lose more this year than anticipated, even though they've raised their overall guidance by about $2 billion on the upside.
I think all those car companies that have said we're going to just stop making gas-powered vehicles are starting to get hit with that promise, hoisted on their own petard, because even when their EV sales are growing, your three divisions that you mentioned there, the petroleum-powered vehicles were like 4 times what the EV division was doing. It ain't there yet. I wouldn't stop making those gas-powered cars yet.
No, they even what part of their press release even said, the EV adoption has been way lower, taking longer and slower than the company had expected. And part of it's because of higher costs, but you and I both talk about the other part of it is you can't get from here to California in a reasonable amount of time in an electric vehicle. And so until they fix that problem, they're not going to become the family car to take the vacation in.
Yeah, I still have faith it's going to happen someday. I saw an ad cross one of my Google searches the other day talking about how there's a new model, one of the major brands that's supposed to be able to get 800 miles on a charge. If they actually do that, now they're getting into the range of something that they can get some broader adoption. But, I'm sorry. Car I can only drive 200 miles on the highway with before it needs to be charged ain't going to work with my individual lifestyle. I got faith it's going to happen. It just hasn't happened yet.
Yeah, that's right. The scientists, they'll figure it out eventually, Dave.
Oh, yeah, it'll happen. It hasn't happened yet. It's a little early to say we're going to stop making gas engines.
Yep. Hey, we got Roku reported, and they're having a big day today. And they didn't make money, but they didn't lose near what they were expected to lose. They're expected to lose like $1.26 a share. They only lost 76 cents, and their revenue was I'll say about $70 million more than expected. So they were up as high as 10%. They're down about 9.5% right now. And then let's focus on oil companies because we had 2 of those guys report today, Exxon and Chevron. Now Chevron, Exxon had mixed results. They missed on earnings but beat on revenue, and they're trading down a little less than 0.2% this morning. Now Chevron, they beat across the board, and however, if you look at year over year, their earnings fell from a year ago, but they're flat right now basically to start the morning off.
How in the heck can you screw up at $3.69 a gallon for gas?
I don't know, man. I think it's going to go up when you see the oil price today. So,
yeah.
The other, I don't know, where do you want me to go? I got P&G reported. Their quarter revenue beat expectations. They released a gloomy outlook for 2024 sales, and Wall Street didn't like that for a little while, but it's bounced back up. It must have been a buying opportunity early this morning because it's up 1.5%.
All right, one more.
Big loser today, and this is not a name that everybody's going to recognize. However, it is an integral part when it comes to solar and electric vehicles and that kind of stuff, and that's called Enphase Energy. They had a terrible quarter. They missed their revenue number by about $11 million, came in at $711 million, and they fell short on earnings as well. They are trading down 14% this morning.
Ooh, I don't like that. They have they make the control unit for my solar system at home, so I'm familiar with that brand.
Yeah.
Resetting the table, it was an off day on Wall Street yesterday. The Dow was the big loser in the bunch, down 0.2%, but the Standard & Poor's, the NASDAQ, the Russell 2000 all lost ground as well. Even the VIX went down, which kind of surprised me a little bit. 45 minutes before we open, what are we looking at this morning, sir?
Hey, Dave, I got some green ink. It is off of their highs from when those original numbers came out at 8:30 this morning, but the Dow's still up 0.5% right now. The S&P 500 is up almost 0.7%. That's $31. And the NASDAQ 100 right now is a huge winner, up 1.1%, almost $170 on that first 100 NASDAQ stocks. Russell 2000 is not far behind them. It's up a little over 0.8%. So some good numbers coming out on the indexes this morning. Even on the other side, we've got green ink today, Dave. Silver's up 0.4%, still below 25 though, at $24.46 an ounce. Gold up a little over 0.5% to $1,956 an ounce. Dave, crude oil. Over 80. $80.19 a barrel. That's up about a little over 0.1% from close yesterday.
And you see $4 a gallon coming.
Yeah, and I'm fixing to take a road trip.
I may take a bus.
Just my luck.
Really. Overseas markets, mixed bag on both the Asian Rim and in Europe. For the most part, Asian Rim was up. For the most part, the European theater is down, but no big movements on either side first thing this morning. Getting a plan for retirement counts for a lot, no matter what age you're at. How do I find you to get that plan so I can retire the way I'd hoped to?
The planning is a big part of retirement. That's why I developed a core retirement design to help folks out there design the retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again Monday morning, same time on Light FM. Phillip, thank you much. We'll see you then.
All right, have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I thank you for joining me today. I hope you guys have a great weekend. Enjoy the Claytonville Festival if you head that way. And I look forward to speaking to you again on Monday. Until then, have a great weekend.